Aloha folks, welcome to another video. My name is Mark, Mr. Dividend Investor. In this video, we are going to look back at this company called Taiwan Semiconductor. I did a review about this a couple of months ago, checking this out again to see if this is something that is still a buy or possibly a sell. As always, please remember that this is not a financial advice. This is just me sharing. If you are new to the channel, just wanted to say welcome. If you are new to investing and you want to learn about which companies to invest on, dividends, growth stocks, or even penny stocks, you've come to the right channel. Definitely hit that subscribe button. Don't forget to hit that notification bell so you don't miss out on any of the videos that I put out. Do me a favor and quickly hit that like button. It helps the channel grow and it helps videos like these get to be seen by other people. With that said, thank you so much for watching. Hope you like this video. Let's take a look at this company. First, Taiwan Semiconductor, ticker symbol is TSM. This is a company that manufactures and sells integrated circuits and semiconductors. So if we look down over here, you can see it was founded in 1987, service about 499 customers and manufactures more than 10,761 products from various applications, covering a variety of computers, communications, and consumer electronics market segments. Now, if we look down to some of the fundamentals, you can see revenue and net. So the net revenue is in the millions, so 362 million, and the net income is about 139 million. Now, if we look at this article from Monthly Fool, they gave about 3 reasons to avoid Taiwan Semiconductor stock. So this was in June of 2021. You can read about these on some of it, but I'll give you a little bit about it. So it says here, it's near 10-year high. So over 10 years, the return exceeds about 810%, and the stock has risen by almost 120%. Now, if you look at it, they talked about the rising chip production could lower production prices. So they also talked about how the geopolitical issues could hurt TSM. So they kind of brought about how it faces political turmoil, especially China's renewed threats to reclaim what is considered road. But in the end, if you look at the article, the bottom line is, they recommended that TSM is a chip stock that investors only want to consider if it's sold at a discount. So if you want to read more about it, just go to the look for this article and read about it. So again, something to consider, and always do your research and do your own due diligence. Yeah. Now take a look at Simply Safe Dividend. Based on their dividend safety score, they rated it as a 62, which is safe. Dividend yield is 1.37. Market cap is about 535 billion. Now, if you look at the key metrics, you can see payout ratio is about 49%. They did cut their dividends during the 07 and 09. If you look at the dividend growth, last 5 years, it's up about 11%. Last 10 years is about 13%, which is very fast. Going down a little bit more, you can see uninterrupted dividend streak of 10 years without a reduction. And you got 2 years of consecutive increases. Now your payout schedule, quarterly, which is January, April, July, and October, with the annual payout of 157. Now, if we look down to some more information, one of the things that I will look at is the return on investment capital. As you can see, they put like above 12%. For semiconductor firms, it is 25%. Return on equity is about 30%. So those are good numbers. Now, if you look at CNN Business, their price forecast is in the high of 200, the medium 147, at the low of 85. Analysis recommendation recommended is 24 buys, 6 outperform, 4 holds, and 1 sell. Now, if we look at tip ranks, based on tip ranks, they have a price target of 150 with 31% upside. The highest is 150, average is 150, and the low is 150. Their rating recommended is a moderate buy based on 5 rating. They have 2 buys and 3 holds. Now, if we look at Yahoo Finance to look at who the top institutional holdings, as you can see from the website, you got Sanders Capital. They bought a bunch full in March 30th. Capital West investors also bought some. JP Morgan and Chase. You got Vanguard Group, which one I always like to look for. Bank of New York Mellon. So pretty good amount if you look at these, a pretty huge amount. Now, if you look at the earnings, 4 beats in the past 4 quarters. Again, the revenue, as you can see, it's been going up, as well as the earnings. So in 2020, the revenue is 1.34 trillion. The earnings is 517 billion. So good numbers. Now, if we look at Webull, based on 7 analysis, they rated as a buy. Strong buy about 42%, a buy about 28%, a hold about 14%, and underperform about 14%. Now, their price target is in the high of 177, the average of 135, and the low of 85. Now, if we look at bar chart, you can see the price target is kind of similar with the 149, 142 would be the mean, and 130 would be the low. Now, if you look at the rating, currently it is a strong buy based on 6 analysis. 3 months ago, it's been a moderate buy. And then 2 months ago, it's a strong buy. So pretty good rating. Currently, it is like a 1 hold, 5 strong buy. 3 months ago, it was 1 strong sell and 5 strong buy. Yeah. Now, if we look at some of the key metrics, again, remember, return on equity is 29%. And then return on assets is about 19%. You can see the growth in here. 1-year return, 104. 3-year return, 212. 5-year return, 330. And then you got your dividends here. So you got like 6, 3, and 12, about 35 cents, pretty much. Now, if we look at the chart, you can see for the 9-month chart, not as clean as I would like. You can see it's been, up and down. I always like to look for these kinds of charts right here. It's still finding its way. I would wait for a little bit until I see much more cleaner like this. Now, if we look at the volume, you can see the volume has been steady. The MACD has crossed over here, but then it looked like it might go down this way. And the Rizzo is in the oversold right now. Now, if we look at Robinhood, you can see for the week, it's down 3%. For the month, it's up 2%. 3 months, it's up negative 0.4. For the year, it is up 104%. 5 years is up 339. So I don't have a position right now. I've been in and out of this stock. I would wait. I would like to see it go down to maybe 110, maybe 112. So if it hits to that area, I'll definitely purchase a couple, and that'll cost average as we continue. I like the stock. I think it's a great company in the long run. The dividends is great. I'll definitely go. For me, it's still considered as a buy, but I will definitely wait to see a little bit more of a dip. So you can see from here, you know, it is kind of, if I get it down to about 112, I would probably be happy. Or if we look down to here, you can see from here, you can see about 108. So hopefully, if I see it around that area, I'll definitely go and purchase a couple of shares. So, all right. Thank you so much for watching. Definitely hit that subscribe button if you haven't done so, and do me a favor, hit that like button as well. Stay cool, guys. Always remember to do your own due diligence, do your own research. Please be safe out there, guys. Stay cool, keep investing, and I'll catch you guys in the next video, right? Take care. Aloha.